I know that you have written about how you've been surprised by the strength in the job market and the real economy when you look at the backdrop for this rally in equities. Do you currently believe the disinflation narrative that's now starting to make the rounds?
Well, today we got a kind of a Goldilocks report. Yesterday and today, CPI going down. I've been one that's saying that really the battle is won against inflation, and there's no reason to turn on the screws and risk a recession, for another 1 or 2 points. The progress we have made is really very, very substantial. But also, again, jobless claims, which were trending upward, they dipped last week, and we know there's volatility from week to week, but the real economy is really hanging in there, and which is remarkable. It's the ideal environment for stocks, take a look at the 10-year. It was way above 4%, and what is it now? Like 3.7. Just a sigh of relief. Even though strong economy, those inflation numbers certainly are very, very tasty.
So what does the S&P 500 above 4,500 tell us about where investors think we are when it comes to the economy and when it comes to earnings?
Well, it must be that they really, I think that they think the Fed has maybe nailed a soft landing. I'm not as sure. We take a look at what earnings are supposed to be next year, and that's without a recession. What is it, 224, 225? So we're selling over 20 times earnings. Now, I've often said that 20 times earnings, what I think is sort of the equilibrium. The fact that we're selling a little bit above that, where I think the risk of recession is not zero, means that I think the market is fairly priced as a whole. But as you mentioned again today, if you take the tech stocks, we're talking about 35, 40 times earnings. You're talking about the rest of the market. You're talking about 16, 17 on the S&P, and 14 and 15 on the small and mid cap. To me, that is extreme. It's really the tale of two markets reappearing again today. And I think on the back of the fact that the 10-year goes from 405 down to 370, and we know that. That affects those long-term dated equities.